Critical Man Pictures presents the Forex video training series, Black Belt Second Degree Trade Guide to the Major Economies, United States. The United States of America is comprised of 50 states and a federal district. Majority of the country can be found in North America, but the United States also has some territories in the Pacific. Since its independence from the United Kingdom on the 4th of July back in 1776, the U.S. has become an economic superpower, not just in the West, but in the whole world. Being the world's largest economy, the U.S. plays a serious role in the global market. Just about any economic development in the U.S., such as a rise or fall in consumer spending or an affair by its president that is made public, could create quite a hefty impact on the economies all over the world. The United States neighbors are Canada, Mexico, Puerto Rico, and Cuba, and it has 3.7 million square miles of size, 308 million population, and a density of 83 people per square mile. The capital city is Washington, D.C., the head of government, President Barack Obama. Famous actors include Halle Berry, Johnny Depp, Jeff Bridges, Sandra Bullock. The currency is the U.S. dollar. The main imports are industrial supplies, crude oil, etc., capital goods, computers, telecom equipment, automobile parts, office machines, electric power machinery, consumer goods, automobile clothing, medicines, future toys, and agricultural products. The main exports: capital goods, transistors, aircraft, automobile parts, computers, telecom equipment, industrial supplies, organic chemicals, consumer goods, automobiles, medicines, agricultural products, soybean, fruit, corn, Barbies, Xbox consoles, and Apple iPods. The import partners: China, Canada, Mexico, Japan, and Germany, and the export partners are Canada, Mexico, China, and Japan. The time zones are anywhere between -10 GMT and -5 GMT. The U.S. is widely considered to be the richest country in the world, producing about $14.2 trillion in output in 2009. It ranked 10th in 2009 in terms of capita income. That's just the country's total divided by its population, about $46,000 a year. The U.S. main industries are aircraft, automobiles, transistors, telecom equipment, and other industrial materials. Although it might seem like the U.S. economy is heavily oriented toward the manufacturing physical goods, 70% of its output actually comes from the services sector. Speaking of trade, one key element in the U.S. economy is that the country is notorious for running huge trade deficits, i.e. the total value of goods flowing into the country is far more than the total value of goods going out. The U.S. is also home to the New York Stock Exchange, which is the largest stock exchange in the world. It is also home to the world's largest bond market, with a market capitalization of over $31 trillion and over $822 billion in bonds traded on average. Being the top economy in the world, today's global market, any domestic event affecting the U.S. has the potential to affect markets around the world. Yes, even the foreign exchange market. The Federal Reserve Board, more commonly called Fed, is the U.S. main governing body when it comes to settling and implementing monetary policy. Monetary policy is just the way the Fed controls the availability and supply of money in the economy, and what makes the Fed special from other central banks is that its objectives are based on longer-term effects of its monetary policy. The Fed has two main objectives. The first one is keeping prices of consumer goods and services stable, and the second one is making sure there is sustainable economic growth. In other words, the Fed just wants to make sure that the Benjamins don't lose value and Mama and Papa have jobs. Within the Fed is the Federal Open Market Committee, currently governed Ben Bernanke. The FOMC is tasked to make sound and rational decisions on financial monetary policy. The FOMC has two main weapons used in its battle against inflation and achieve its long-term objectives: open market operation and the Fed's fund rate. The Fed's first line of defense is open market operation is the buying or selling of government financial instruments, like securities, notes, and bonds. The Fed's fund rate is stronger. The more obvious double-barreled shotgun is the interest rate the Fed offers other commercial banks. Now, the one accountable for fiscal policy in the U.S. is the U.S. Treasury. Fiscal policy is the use of government spending or tax collection to influence the direction of the country. To encourage business activity, the U.S. Treasury, for example, could choose to lower taxes and allot more budget on capital infrastructure like highways, schools, broadband, secret military ninja bases, etc. On the other hand, if inflation starts to get out of hand, it could increase tax rates and cut spending. Getting to know the U.S. dollar. Did you know the nickname for the buck for the U.S. dollar originated from buckskin, which was a common medium of exchange from early American settlers traded with the Indians? Even after paper currency replaced buckskin in the barter system, people still refer to the medium of exchange as bucks. Check out these forex-related properties of the buck. A ginormous amount of currency transactions every day involve the U.S. dollar. Commodities like gold and crude oil are also denominated in dollars. During the Asia session alone, the dollar takes up around 93% of all the currency transactions. To put this into perspective, take the New York Stock Exchange and the U.S. bond market, for example. The value of companies listed on the New York Stock Exchange amounts to $28.5 trillion and 78% of the size of the world's $36.6 trillion stock market. Similarly, the $82.2 trillion value of the global bond market takes up the U.S. $31.2 trillion. Every single transaction there in some way involves the U.S. dollar. How's that for fucking liquidity? The Fed and the U.S. government believe should remain strong. Over the past few decades, the Fed and U.S. Treasuries have kept a strong dollar policy. They believe that monetary and fiscal policy should be geared towards strong exchange rate of the U.S. dollar, as it would benefit the U.S. and the rest of the world. How often have you heard the phrase, the dollar is the world's reserve currency? Well, the reason behind this is some countries actually peg their currencies against the dollar. When a country does this, the government agrees to buy or sell a currency at a fixed price versus the dollar. While the government can increase and decrease the supply of money, they are still subject to having the equivalent amount of dollars in reserve. This process magnifies the importance of the dollar around the world, because this means some economies are entirely dependent on the dollar. If the dollar's value were to stage a massive fall, it would produce wide-reaching negative effect in all other currencies that are pegged their currency on the dollar. The important economic indicators for the U.S. dollar. Non-farm employment change, or NFP. The NFP employment report measures the change in number of employed persons in the prior month. GDP. The Gross Domestic Product, or GDP report, measures the currency's total value of all financial goods and services. Retail sales. The headline retail sales report measures monthly change in the total value sales at a retail level. The core version of the report, on the other hand, excludes vehicle sales. The Consumer Price Index, or CPI, measures the change in prices of a fixed basket of goods and services. The core account excludes food and energy prices because of their volatile nature. The personal consumption expenditure. This is very similar to the CPI report, as it measures the price changes of U.S. consumer goods. The reason you should look at their report is that some of the Fed looks at it when making decisions regarding monetary policy, and we all want to be in cahoots with the experts, right? The University of Michigan Consumer Sentiment. Every month, the University of Michigan releases its Consumer Sentiment Report. This index measures the attitude consumers have towards the economy. The more confident consumers are about economic conditions, the more likely they are to spend. What moves the U.S. dollar? Whenever the dollar is at risk of losing its value due to inflation, investors turn to gold for safety. Unlike most financial assets, gold maintains its intrinsic value. Gold is gold is gold. It's the same everywhere. So when gold prices are rising, it could be a sign that the dollar is losing its appeal. Fundamentally, positive economic developments in the U.S. attract more participants to invest in the U.S. An investor would, of course, need to have some dollars to be able to transact in the U.S. So as the demand for U.S. investments increases, the demand for the greenback rises as well. With respect to Japan and London, the U.S. probably has the deepest and most advanced financial markets. This provides many kings, sultans, billionaires, and heirs around the world many type of investments which they can choose from. In order to invest in these American assets, investors would first need to convert whatever currency they are holding into U.S. dollars. The capital inflows and outflows from the U.S. financial markets can have significant effect on the value of the dollar. Since the U.S. dollar takes up majority of daily currency transactions, just about any major development in the world, i.e. a strong GDP growth in Australia, stock market crash in Beijing, or a Godzilla attack in Tokyo, affects its short-term valuation. Bond yield differentials. With investors always looking for the best deal for their money, it's important to keep track of the differences in the yields of bonds in U.S. and other foreign currencies. If investors see that yields are rising in foreign currencies while the yields in the U.S. are staying steadily or going lower, investors will move funds out of the U.S. bonds, selling their dollars in the process, and begin purchasing foreign bonds. Rumors on the interest rate grapevine. Market participants pay attention to interest rate trends, and you should too. If the Fed is expected to raise interest rates, this means the demand for dollar-denominated financial assets, like treasuries, could rise, which could be bullish for the dollar. If the Fed is expected to cut interest rates, it could lessen demand for these assets, and we could see investors move their funds away from the U.S. dollar. Since Fed officials usually drop hints about the central bank's future interest rate moves, traders are all ears during policymakers' speeches. Trading USD as the base currency. US dollar X is trading amounts denominated in US dollar. Standard lot sizes are $100,000 US dollar, and mini lots are $10,000. The pip value, which is denominated in XXX, is divided by dividing 1 pip of the US dollar X, which would be 0.0001 or 0.01 depending on the pair being talked about by the US dollar versus XXX current rate. Profit and loss are denominated in XXX. For one standard lot position size, each pip movement is worth 10 XXX. For one mini lot, each pip movement is worth 1 XXX. For example, if 1 pip is equal to 0.0001 and the current exchange rate of the US dollar versus XXX is 1.400, 1 pip of one standard lot would be equal to 14 US dollars. Margin calculations are based off of US dollars. With a leverage of 100 to 1, 1,000 US dollars is needed to trade 100,000 US dollar CAD. The US dollar trading tactics. Now let's put all these things we just learned up and come up with some tactics for the dollar. Looking at the differences in U.S. economic developments and economic data from other major economies is a good way to start off trading the U.S. dollar. For example, a jump in U.S. retail sales and ugly results in the U.K.'s unemployment situation report would give you a good reason to sell the pound dollar. The U.S. dollar index, or USDX, tracks the performance of the U.S. dollar versus a fixed basket of currencies. Is also a great barometer of strength of the U.S. dollar. By looking regularly at the U.S. dollar index, you can find some clues about where the U.S. dollar is headed. A USDX that is trending upwards could provide you with additional confirmation that you need to take a short position on the euro dollar. Talks of a Fed fund rate hike, which signals the possibility of higher returns on U.S. assets, encourage traders to buy up the U.S. dollar. Well, don't get left behind. Taking note of the Fed's monetary policy outlook, which is usually part of Fed's officials' speeches, could yield some clues to the directions of the U.S. dollar. Hawkish remarks could serve as signals to go long on dollar-yen, while dovish comments could serve reasons to short U.S. dollars. To stay updated on economic developments in the United States, make sure you read U.S. economic commentary.